Hey, everybody. Welcome to the weekly wrap up. My name is Gareth Soloway here, Chief Market Strategist at VerifiedInvesting.com. So the week is coming to a close. We're seeing a net negative week. So markets are down slightly for the week. We had 3 consecutive down days in the middle of the week. But here on Friday, we're going to end with a positive day. S&P 500 up about 0.5%. NASDAQ just up a little less than that. So not a big day to the upside. But if you watched my trading game plan this morning, we talked about that PCE data and how at 7:30 in the morning, 1 hour before it was released, all of a sudden the futures started to go up candle by candle by candle on the 10-minute chart. Every candle from 7:30 in the morning to 8:30 took the markets up. And then sure enough, what did we see? We saw PCE data coming in perfectly in line with estimates. The market pushed up. Now, at the beginning of the day, we did see a little bit of a pullback, but then the markets went into Friday float mode and went back towards the highs. All right. So again, generally a positive move there in the markets, although I do call BS on it just a little bit based on what we saw ahead of that number. But when all is said and done, the markets continue to hold in a tightening wedge pattern on the S&P. And wedge patterns, again, when they break, they are explosive. And we're likely going to see that explosion soon. So let's take a look at the charts here. Flipping over, first things first, we've got to look at the S&P 500. So this is the big wedge pattern on the S&P, right? We go back on this top line to October of 2023, and it connects through every major low pivot until it breaks during the Liberation Day sell-off. And then finally, we kissed the high on Monday. So really on Monday, we had this great move up, but it tagged the high. Then Tuesday, Wednesday, and Thursday, we went down until we tagged the low end of the trend line, which has literally marked the low pullback on every pullback going back to May. And then what happens? So you hit the high end, you pull back. What do you think happens when you hit the low end? You get a bounce. And that's what we saw today. So S&P 500 right now with just less than 2 minutes to go, trading up 0.6% or 0.6%. Now, the kicker here is this, right? When you have a wedge pattern, you don't know when it's going to break, right? We could stay in this pattern up and down and just continue. And that would just suck more volatility out of the market because these two lines are getting closer and closer together. So if you look at the volatility going back here, it was from peak to trough. It was really wide. But as it gets kind of squeezed between these two lines, it's getting tighter and tighter. But ultimately, it works like a spring, meaning that you're tightening the spring or tightening the pressure cooker, whatever you want to use as the analogy. You tighten it and tighten it and tighten it. And then you know what? When it finally breaks, it's so tight that the explosion is epic. And this is where it comes into, as a technician, I have to follow these trend lines. I have to watch this lower trend line because if price were to break below this, you know what happens? I don't think it's just a 2% drop. I think it's a 10% drop on the S&P. And vice versa. If we break to the upside, it could be an initial explosive move to the upside, a la what we've seen on silver. Silver recently broke an upsloping trend line and is now trying to make its way back to $48 to $50 per ounce. So all of these things have to be paid attention to. All right, same thing applies to the NASDAQ 100. Incredible trend line here, even more epic than the S&P 500, because this one goes back to the COVID lows in March of 2020. But you could see here, and this is what's really catching my eye, is that off of this trend line, we saw almost a 16% drop, and then here, a 25% drop. And lo and behold, where are we? We're right back to that trend line. So now listen, just because we had a 16% and a 25% doesn't mean we have to have something in that range. But you would assume, and I think it's highly probable, that we're going to get some sort of pullback off of this level, which already started this week. Now, the question is, well, where's your key break point, right? And that's really what I'm watching. So next week, I'll be watching this trend line on the NASDAQ 100. It's an easy trend line to start with because it goes to the Liberation Day sell-off lows on April 7th, and it connects through the lowest point since then on as a trend line, right? So very clearly, you can see no other candlestick touches that line until the low of this on September 2nd. Okay, and then we pushed up. We went up into that high end. We pulled back. If this line breaks, game on. That's where I think we see, again, a bigger sell-off. So the S&P, my guess is 8 to 10%. On the NASDAQ, the last time was a 25% drop. The previous time was about 16%. So I would say somewhere over 10% if we break this level. Now, let's just out of curiosity, if we break here from the highs, what would be a 10% correction? So a 10% correction, in fact, an 11% correction would only bring us back to where we were in June, the highs in June. So it's not even that big of a move, but compared to what investors are used to literally 1% pullbacks at most. In fact, it's literally been months and months and months and months since we've had a 2% pullback in one single day. You basically have to go back to the sell-off in the Liberation Day sell-off to find a day where we even went down more than 1% in a single day. All right. So that kind of summarizes it there. The dollar today, again, off of the back of relatively benign inflation numbers, pulled back. It kind of was, you had two big up days here, so not surprising, but really nothing new to report on the dollar. And then if we look at the 10-year yield, we were all looking at a sub 4% possible 10-year yield when the Fed was cutting rates. In fact, we pierced 4%. But look at this. It's gone right up, and it was up again today, trading at 4.18%. I think the best look at this chart is on the weekly chart, which clearly shows a trend line going back to 2022 and connects through all these lows. Now, eventually, I think this breaks to the downside, but needless to say, right now, it's fighting higher on the chart. It's trying to get a bid here and go back up. And if it goes up enough, it's going to put pressure on the markets. On the other side, if it goes down enough, it's going to panic the markets because it means the economy is slowing very, very quickly. Now, again, this was an interesting week, right? Because the economic data that was reported this week was almost too perfect. All right, jobless claims were the lowest in 6 months. That's people filing for unemployment. Durable goods orders were very strong, stronger than estimates. We saw GDP being revised up again, even higher. So again, you add that to the benign inflation numbers that we got this morning, and it was really a recipe that you could argue, why didn't the markets go up more this week? I mean, we were net down for the week. Not very much, but we were net slightly lower for the week. Why didn't the markets go up more on the week? And that could be something that's giving us a signal, right? If you think about it, you got a strong economy and low inflation. That's great. For the markets, that should be perfect. That means corporate profits can stay strong. All of these things can stay strong. Yet more and more, we're seeing problems arise. Earnings, Costco fell on earnings today. Right? We heard earlier this week about NVIDIA investing in OpenAI, $100 billion. The markets loved it initially. And then they started to say, wait a minute, it's investing $100 billion in OpenAI, so OpenAI can turn around and use that money to buy NVIDIA chips. Is that really kosher? Is that really legit? Or is that a little shady? Then you had Oracle, which, by the way, Oracle fell again today. In fact, we can take a look at that chart. But Oracle is now raising debt, which is never good for a company to do because essentially they're financing their growth, which means when things do slow down, they're going to have to deal with that debt, right? And when things inevitably slow down. And then I think the biggest headline for me this week is that more than 50% of GDP is based on the AI factor, meaning that the CapEx spending on AI is now making up well over 50% of GDP, which is probably why GDP keeps on going up, right? But listen, you could say that's great for GDP and the U.S. growth, and it is, but it does also bring up the idea that what if that sector slows down? What if all of a sudden AI starts to just slow a little bit? All of a sudden the U.S. economy is in a lot of trouble. All right, so I mentioned Oracle. Let's take a quick look at Oracle here, which continues to decline. This is your daily chart. Look at that decline. But here's your daily chart. Look at the continued decline here on Oracle, closing around this 283 level. I said this from the very start. When this stock was up 40% on earnings, I said it was beyond ridiculous and it would come in. And I still am sticking by my gun saying you're going to eventually touch 258 and eventually even gap fill. Okay. So again, a lot of the downsides in. You were at 345. It's now trading at 283. But I still think there's more downside in the coming weeks and months. Microsoft was up today a little bit. So while NVIDIA kind of struggled, was basically flat, we saw Microsoft gaining a little bit of traction, but nothing really here. Even that stock, this was earnings on Microsoft, and look at the price performance since that. Meta Meta right over here was earnings, and look at that. And this is a big chart, guys, because this is a head and shoulders that has now triggered. All right. Head and shoulders patterns, for those of you that don't know, they are bearish patterns. Okay. But a head and shoulders means nothing until it triggers. A trigger is when it closes below the neckline. And the neckline today on Microsoft has now been closed below. So that is very, very bearish for Meta. It's a great example of a head and shoulders pattern. And again, this is another one, which this was your gap up on earnings and basically marked the high. And since then, it's just continued to come in. And part of the issue here is even Mark Zuckerberg last weekend, he said that AI is in a bubble. But he also said that Meta has to keep spending like a drunken sailor because they can't risk falling behind in the AI game. And that's what's going to happen here. And that's what creates a bubble, right? Even people that are in the bubble, they're like, yeah, we know it's a bubble, but we still have to spend hundreds of billions of dollars, which creates an even bigger bubble, which they'll all pay for. By default, the investors will pay when the stocks collapse later on, whether it's 6 months, a year, whenever it is. But eventually it all comes crashing down. Always remember that, folks. All right, Tesla today, good move on Tesla. It has not broken through resistance, but again, it continues to hammer on this resistance level. If it breaks through, we talked about it this morning in my trading game plan, 465 and then 488 to 89. Those are your next two upside levels if this level, this 443, can break. But again, Tesla continues to be strong, had a great day today. Amazon got a small bounce. Not a good chart on Amazon, guys. Yes, it's getting a bounce. It could even retrace to the scene of the crime, but it has now broken trend from the Liberation Day lows, right? The Liberation Day sell-off lows. So that is problematic. That is not good for that stock. Palantir, which has done pretty well lately, is showing weakness. So even though the markets were up today, Palantir was down, as was Robinhood. It does seem like some of these kind of more meme-ish, retail-friendly stocks that are favorites among the retail crowd are starting to struggle. And honestly, you don't have to look any further than OKLO. OKLO dropped a massive amount from the highs this week. I mean, number one, it was an incredible move to the upside. From this low here going from $67 to $145. But from that high, it's already collapsed 23%. And again, this was a meme crazed run, should have never been up here. The company literally has no revenue, won't even turn a profit for years and years and years. Finally, reality's coming back in. But I think this fall here starts to make people that are in names like Robinhood and Palantir a little bit nervous considering the valuations that are being placed on these stocks. All right, Bitcoin. Bitcoin, another head and shoulders that has triggered. All right, so Bitcoin, here's your neckline of your head and shoulders pattern, and it did close below. What's fascinating here is that the target level is right down to about 90 to 91,000, and it's also an upsloping trend line and horizontal support line. And so this gives me a very firm basis to say if Bitcoin declines, and there's nothing that says it has to come all the way down here, it would be the calculated target. But remember, targets, they don't have to play out. That's just the most likely solution. But ultimately, the target is this level, and you also have a plethora of other supports. And so overall, if we get down here, I probably do go long on Bitcoin and look for a significant bounce off the 90, 91,000 level. All right, taking a quick look at gold today. We'll take a look there. Gold did push up, but still stuck below the parallel. This is going to be a big test next week. Can gold push through this bigger parallel that goes back to 2024? Generally, you would say no. If just looking at 100 of these charts, I would say about 70 to 80 of them would not push through. But gold has a mind of its own. It is so hyped up. Institutions are buying, retail is buying, central banks are buying. So we just have to watch and see. But needless to say, there's a lot of resistance up at that level there. Now, silver continues to be a rock star. All right, had a little bit of a pause at the 44 resistance I gave. I said it was only minor resistance. And sure enough, that's exactly what it is. Just minor resistance, literally 2 pause days, and then it blew right through. Today hitting a high of 46.65. And this one, my friends, looks like it is heading back to the high here at near $50. And that's really where I'll start looking for a trade on the short side if it gets to 50. Now, remember, I'm a short-term trader, so it'll just be a quick pullback level. But I do think it has a good chance of getting up to 50 next week. Very, very possible. Oil really didn't do a whole lot today, guys. basically a muted continued move in oil. It did kiss my underbelly of resistance here, but I really got to see a hit at least to say, okay, it's hit resistance. Maybe we'll see that on Monday. And then natural gas, guys, continues to trade in a sideways pattern formation. So listen, when all is said and done, markets gained today on the back of that PCE relief. The key is this, and remember earlier this week we saw Jerome Powell again warning that markets were too expensive, warning that it's adding to inflation, warning that the Fed is very concerned about inflation. But the markets or investors' ability to focus on news for more than 24 hours is minimal. All right. As soon as we get these PCE data out, investors say, okay, right back in the market we go. Now, yes, it was a kind of a muted week in that we didn't really go up for the week. We were flattish to down, but still, there's no trigger yet. And the beauty of what I've given you in today's weekly wrap up is simply to watch this trend line. This trend line on the S&P to me is everything. That's what I'm watching, folks. You want to know exactly what I'm watching to when I'll start saying, okay, game on, we're in this now. This will be this level here. When it breaks, right now it's trading at around 6,600. When that breaks, the floodgates should open for a correction. All right. You guys have a great weekend, guys. Thank you so much for your support. Love it. Your comments, everything are absolutely amazing. I look forward to being back on Monday for my trading game plan at 9 a.m. Eastern time. You guys have a good one. Take care.